Nick, good morning. It is the Money Clinic. It's Thursday. How are you keeping? How's things down in Galway?
That's all very well. The sun is still shining.
Excellent.
So we're surviving.
And things are opened up there. You're allowed to have a meal inside a restaurant. Have you been in Galway town itself in the last week?
No. It's the races this week. So we're being invaded by all the people from the north, from the UK, and and they're bringing their germs with them. So I'm staying away.
It's not a bad idea. So listen, what's happening in the markets this week? I want to talk to you the first half of this conversation around about, I want you to educate me and the listeners around the stock market. I have a few questions around that. And then maybe the back half we'll talk about debt. So go ahead. What's the latest in the last 7 days?
Yeah, well, it's been like earnings are, we're in the midst or in the middle of the earnings season now. So the big tech companies were reporting this week and they've all far exceeded expectations. And a couple of them have had, fairly significant growth estimates and forecasts being hit, and their stocks are doing particularly well. But I think we mentioned it a little bit last week. I think Q3 and Q4, so the second half of this year, there are some concerns that there is going to be a deceleration in terms of sales and that things aren't looking quite as good going forward. So you've seen a few stocks that have suffered as a result of that. So if I was going to summarize the markets at the moment, they've stagnated a little bit. We're in the Dow, which I know you want to ask a few questions about in a minute. We're hovering around the 35,000 level, which is the record high, but we can't seem to push on. So, there is a worry that this very much is the top of the market, and a lot of questions about where we go from here. Now, they had the Fed meeting yesterday, so I'm just going to share the Treasury yield screens with you there. So we've been speaking about this over the last couple of months, and when they signaled the potential for a couple of rate cuts or rate increases, towards the back end of 2023 or possibly even earlier, the yield ran up to about 1.7. And this is one of the things that starts to worry the market. So you can see it here and again here, but we're all the way back down at 1.2. Doesn't look like there's going to be any imminent rate increases, but the Fed meeting yesterday, there was the huge play on words. They're as good as the politicians when it gets to these sort of scenarios and using different forms of language to kind of help the markets along. And there wasn't a great deal new that came out of yesterday's meetings. COVID is definitely still a concern, but it's a medical concern rather than an economic concern. So things look upbeat, they look good, but there is a limit to where this market can go to.
Just in terms of the stock market then, so say for our listeners and even the likes of myself, I've no real understanding of the stock market. Yeah. So the people who buy shares and invest in stock markets, do they mostly do that through brokers? Or we have talked about the growth and the influence of the retail investor now, where you download an app onto your phone. I think I read somewhere that maybe retail investors in some instances with some companies have maybe 20, 25, 30% of the stock. Just in terms of actually, I suppose for people who are interested in the stock market, is there a sort of a guide for dummies? Sort of where would you start investing? Would you, how do you start out? How would you advise someone who was interested in the stock market to get involved in the stock market? What's your view on that?
Well, look, there's plenty of brokers out there. There's plenty of them in the UK. Banks can assist you with this as well. But I think one of the things that, everybody's become very price conscious. And so if you look back to the traditional stockbrokers that people would have used 15, 20, 30 years ago, they would have been quite expensive. So it's quite expensive to get involved in the stock markets. And that's why people probably didn't invest as actively as they could have. But in more recent times, it's become more affordable. And Robinhood and some of those enterprises have made it even more affordable, so people can access it on their phones and get involved. The best thing is always, and we speak about this regardless of what you do, you need to educate yourself. You need to be very conscious of the amount of risk that you're taking on. It needs to be money that ultimately you can afford to lose. This isn't some form of speculation that's going to make you rich quickly, and that's why we often talk about lowering your expectations in that regard. But certainly building up a small portfolio when you're, when you're starting out work is no harm at all. You look at the stock market just over the last 13 to 15 months, it's almost trebled in terms of monetary value, and there's been lots of stocks that have moved at least that sort of distance. So it is a way to, to start to interest yourself in the stock market, but also to educate yourself about it as well and make some informed decisions going forward.
There's also some good films people could watch, like The Rogue Trader's not a bad show.
There was a good lad in that. I think he was treated unfairly.
Yeah, Ewan McGregor, I think you call him. The Wolf of Wall Street's not a bad show as well.
Yeah, no, complete charlatan, that fella.
Yeah, Jordan. Yeah, he is. We were talking off camera. You were going to get round to asking me about debt. What's happening? What is it that you want to know? I'll educate the masses here.
Well, look, just from an education perspective, and I think, we've often spoken about engaging quickly when you have a problem. What is the difference between consumer debt, government debt, and what should people be doing about things if they find themselves in a difficult situation?
Right. Okay. So we work in two spaces. So the funding side, I'm quite active on LinkedIn at the moment because there's lots of loans being rolled over up until now. So lots of people now have to look at refinancing. Yeah. We're encouraging people to engage, but also it would be prudent to talk about debt sometimes as well. We have a debt business, GDP equity experts. And what we know is over the last 12 months that companies and individuals have increased their debt positions. And it's good to take on debt because it then allows you to grow and invest your company. But also you have to manage debt. And unfortunately, we know from the business cycle that people get into trouble. They can't afford to repay their debt. And then we have the cyclical nature of insolvencies and bankruptcies. And like, there's no doubt that we're now entering that phase whereby we're going to see a lot of liquidations, companies being wound up, companies are going to get into problems. So it is important to talk about it in two different ways. So government debt is so much different than consumer and business debt, because with government debt, the economy goes into infinity and they can print the money literally out of thin air. So that shouldn't be compared to business debt and consumer debt. It's the old adage that we've talked about many, many times over the years. Education is nothing without understanding. The observation I would make is that, your first point of call is normally an insolvency practitioner if you're in debt. However, the challenge, and most people don't understand this, but that IP's obligation is actually to the creditors. He can't really advise you around your holdings. He can't really give you a 12-month, 24-month plan to mitigate and protect any value or assets you may have. So, the business field is a very unfair playing field. And what I have found over the last 4 or 5 years, because I've went through a couple of reinventions in my own business career, it's very important that people educate themselves around debt and the options. There is an informal route to dealing with debt where you don't have to get involved in the formal insolvency route. I think what's key is that you meet someone, you speak to someone, you engage with a company or a group of people who can actually set out all of your options, as opposed to ambulance chasers and the winding up merchants who are very keen to, I suppose, very obsessed with fees and not a very positive way and creative way of dealing with debt challenges. So is there any other queries on that?
Well, no, so the key really is to engage. Sometimes it's a difficult subject.
Yeah, but engage with the right, there's no point asking a plumber to hang a door, you would ask a joiner. And the problem in the business world is that you think the only option for you is to speak to an insolvency practitioner. I'm not running down IPs or their role in this. However, they do act for the creditors at the end up. And the challenge is finding a group of people who are interested in protecting your assets and giving you a plan, a recovery plan. And that's obviously where we would step in from a mediation perspective. And we've saved and advised hundreds of companies in the last 10 years. It's not new to us, but there are others outside of ourselves who are equally capable of providing those kinds of solutions.
Okay, well, that's good.
Yeah, there you go. So look, there's another 10 minutes that flew in this week. That was exhilarating. So look, I'll speak to you again next week.
Take care, mate.
All right, well done.